Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Syukrini binti Muhammad. I would like to present the introduction of this group project. Our group project is about financial disclosure in financial reporting based on the related articles. Financial disclosure is important because it provides transparent and reliable information to investors, shareholders, and other stakeholders. In this presentation, we analyze two articles that discuss different parts of financial disclosure. First is operating segment and second is related party transaction. Objective of this project are compared to article on financial disclosure, summarize the main findings of the articles, explain the importance of disclosure discussed in the article, and last one is provide the recommendation to improve financial disclosure. Article 1 is about operating segment. The title of this article is The Impact of IFRS 8 Operating Segment Disclosure on Weighted Average Cost of Capitals, Evidence from Emerging Markets. The author of this article is Al-Fatih Bashir Idris Al-Bashir. The article is produced on 2025 by the International Journal of Auditing and Accounting Studies. We choose this article because the article is discuss the disclosure requirement under IFRS 8 operating segments. Explain how segment disclosure help investor to understand a company's performance. Show that better disclosure can reduce information asymmetry and improve investor confidence, and it relates directly to the importance of financial disclosure in.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Hanisa binti Rosali. So I'm gonna continue to present the summary of first article, which is operating segment. The article we selected investigate the relationships between IFRS 8 operating segment disclosure and the weighted average cost of capital WACC in emerging market. The main objective of this study is to examine how different dimensions of operating segment disclosure influence a company's cost of capital. The study analyzed 32 publicly listed companies in Saudi Arabia over the period from 2017 to 2022. Using multiple regression analysis, the researcher examine 4 dimensions of operating segment disclosure, namely general information disclosure, profit or loss and asset or liabilities disclosure, reconciliation quality disclosure, and entity-wide disclosure. Based on the finding, the study found that general information disclosure has a significant negative relationship with WACC. This means that better disclosure reduces information asymmetry and lowers the company's cost of capital. Next, profit or loss and asset or liabilities disclosure also has a significant negative relationship with WACC. More detailed segment performance disclosure help lower the company's cost of capital. However, reconciliation quality disclosure has a significant positive relationship with WACC. The study explained that complex reconciliation information may increase investor uncertainty, which can lead to a higher cost of capital. Similarly, entity-wide disclosure also has a significant positive relationship with WACC. More extensive geographical and major customer disclosure may increase investor perception of risk. Overall, the study found that the 4 disclosure dimensions explain 45.6% of the variation in WACC. In the comprehensive model, profit or loss and asset or liability disclosure remains significantly negatively associated with WACC, while reconciliation quality disclosure has the strongest positive effect. General information disclosure become less significant. Meanwhile, entity-wide disclosure is no longer significant when all 4 disclosure dimensions are considered together. In conclusion, the findings suggest that different types of operating segment disclosure have different effect on a company's cost of capital. That is all from me.
Assalamualaikum. My name is Adibalina binti Aswadi. Now, I will present on the importance of operating segment disclosure under IFRS 8. This standard ensures that investor, creditors, and regulator understand how a company performs across its different business segments. First, it reduces the information asymmetry. Segment disclosure narrows the information gap between management and external investor by providing granular data on each segment. Investor can assess performance and risk more accurately, thereby reducing market uncertainty. Second, it lowers the cost of capital. Comprehensive disclosure of financial performance directly lowers the company cost of capital. When investors feel confident about a company's clear prospect, they demand a lower rate of return, effectively reducing the company's WACC. Third, it improves the investment decision. It significantly improves investment decision and corporate valuation instead of relying solely on consolidated financial statements. Investors can evaluate the specific profitability, assets, liability, and geographical risk of individual units. Lastly, it enhances transparency and accountability by applying agency theory and signaling theory. Detailed disclosure serves as a positive signal to the market, demonstrating management confidence and building strong investor trust. While IFRS 8 provides a solid framework, current corporate reporting practices can still be significantly improved in three ways. First, companies should adopt more investor-friendly disclosure. Many annual reports rely too heavily on complex technical accounting language, which diminish information usefulness. Companies should use plain language and integrate visual elements such as charts, graphs to make data accessible. Second, there must be a greater consistency across reporting periods. Some companies frequently alter their operating segment definition, which hinders historical trend analysis. Maintaining stable segment classification is crucial for investors to accurately compare performance over time. Finally, we must strengthen corporate governance framework. High-quality financial reporting does not depend on accounting standard alone. It requires robust internal oversight. Strong governance ensures strict, complete compliance with IFRS 8 requirements.
Article 2 is about related party transaction. The title of this article is The Disclosure Framework of Related Party Transaction in Selected Asian Member States. The author of this article is Muhammad Umar Abdul Razak, and the article is produced on 2020, and the article are from the UUM Journal of Legal Studies. We choose these articles because the article focus on disclosure of related party transactions, explain how proper disclosure help to prevent conflict of interest, highlight the importance of protecting minority shareholders, and compares the disclosure practice among selected Asian countries to improve transparency and corporate governance. My name is Nurul Ainazwa binti Azrain. Now I will present the summary of our second article, which focus on related party transaction. RPT refers to transaction between a company and its related parties such as director, material owner, or connected person. The article explains that RPT can be beneficial because it may improve efficiency and resource sharing. However, it can also be harmful if controlling shareholders use it for personal benefit, which may affect monetary shareholder. Because of this, the article highlights that disclosure is very important. A good disclosure framework helps increase transparency, reduce conflict of interest, and protect minority shareholders from abusive transactions. The study compared the RPT disclosure framework in Malaysia, Singapore, and Thailand. Although these countries adopt the ASEAN Disclosure Standard or ADS, the article finds that they still use different threshold and approval requirements. In Malaysia, RPT is regulated through percentage-based thresholds such as 0.25%, 5%, and 25%. In Singapore, the threshold is based on net tangible asset. Meanwhile, Thailand used a transaction size approach where small, medium, and large transactions have different approval requirements. The article also discussed the ex-ante approval process, which means RPT must be disclosed, reviewed, and approved before the transaction occurs. This helps prevent abuse before it happens. In conclusion, the article showed that RPT disclosure is important for transparency and minority shareholder protection. However, ASEAN still lacks a fully harmonized disclosure framework.
My name is Shahnasrin binti Abdullah. Now, I will explain why the disclosure of related party transactions is important based on this article. First, disclosure improves transparency. Related party transactions involve transactions between a company and its related parties, such as directors or major shareholders. The article explained that without proper disclosure, these transactions may hide conflicts of interest. Therefore, disclosure allows shareholders and investors to understand whether the transaction is fair and benefit the company. Second, disclosure helps protect minority shareholders. The authors explain that controlling shareholders may use related party transactions for their own benefit. By requiring disclosure and shareholders' approval, companies can reduce the risk of unfair transactions and better protect minority shareholders. Another important point is that disclosure strengthens corporate governance. The article shows that Malaysia, Singapore, and Thailand require companies to disclose significant related party transactions and in some cases obtain approval from shareholders or independent advisors. These requirements improve accountability and increase investor confidence. Finally, the authors recommend that the Asian disclosure standards should be strengthened. Although Asian already has disclosure standards, they are still too general. The authors suggest introducing a clearer approval process, similar to the European Union, to provide better protection for minority shareholders. In our opinion, this article clearly shows that disclosure is not only a legal requirement, but also an important governance tool. Strong disclosure improves transparency, protects shareholders, and increases confidence in financial reporting. Thank you.
From both articles, we found that disclosure plays a very important role in financial reporting. Operating segment disclosure help to reduce information asymmetry and improve transparency, which supports better investment decisions. Meanwhile, related party transaction can help to protect minority shareholders and reduce the risk of conflict of interest. Both articles show that disclosure is important in strengthening transparency, accountability, and corporate governance. In conclusion, both operating segment disclosure and related party transaction disclosure are important in improving financial reporting quality. The article enhances transparency, accountability, and investor confidence, as well as support better decision making. From this project, we learned that disclosure is not only about compliance, but also about building trust and transparency. We also learned that the different types of disclosure share the same goals, which is to improve the quality of financial information and strengthen the capital market.